Hello and welcome to Market Briefing. I'm Martin Bakkerdax, European Business Editor here at the IB Times UK. Well, we're looking into the driving day for European equity indices. They're testing 5-year highs here in Britain and indeed in Germany and multi-year highs around the continent. Lots of reasons to be optimistic, even if some domestic economies are beginning to underperform. Really what's driving the sentiment at the moment is that better than expected earnings season in the United States and of course continued support from central banks all around the world. We look at the S&P 500 yesterday, for example, and we're in touching distance of an all-time high for the benchmark of U.S. equity performance. The index is up 5.2% on the month so far, and that's the best start since 1987. A bit more than a third of S&P 500 companies have reported so far, and 75% of those have beaten earnings forecasts. So investors are taking a lot of optimism from that, and of course we know that stocks are indeed a forward-looking indicator for global economic performance. We had an interest rate cut this morning from the Reserve Bank of India. They took their benchmark rate down to 7.75%. Again, more examples of central banks offering the kind of support that equity investors really like because it lifts asset prices all over the world. So we're seeing that develop over the days, even again, if some investors are questioning the strength of specific domestic economies. And when I say that, of course, I'm talking about Britain, which is still mired in concern over a potential triple-dip recession. Now, that belies the fact that the FTSE 100 is testing that 5-year high and is trading over 6,300 today. Most of the earnings from the FTSE 100 companies come from outside of the UK, and it isn't really a benchmark of UK PLC performance. Investors are really left to play sterling rather than any other asset class if they want to make a bet on sustained economic weakness. Sterling is trading around 6-month lows against the US dollar and about a 14-month low against the euro. They're not able to play the bond market, of course, because the Bank of England is buying up so many gilts as part of its $375 billion program of quantitative easing. And again, as mentioned, you don't really play the equity market because of its exposure to global growth. So again, look at sterling if you want to get a sense of investor perception with respect to the weakness of the British economy. If you check out the economy page on IB Times UK, you'll see a couple of other stories we're following this morning as well, including that $4 billion write-down for Anglo American, the biggest platinum producer in the world, taking a hit on rising costs associated with its Brazilian mine, really only a couple of weeks after a $14 billion write-down for Rio Tinto. So the cost base for a lot of the global miners rising significantly, and in both cases, in Rio and Anglo, it seems to have cost the job of their chief executive. Cynthia Carroll, of course, was destined to leave in April anyway, and Rio Tinto's Tal Babanisi was forced out, of course, on the 17th of January. We are also looking at a story from the Financial Times this morning that RBS is set out to pay around £250 million in bonuses for the 2012 year. That's going to be on top of the potential £500 million fine they're likely going to have to pay for their alleged role in LIBOR manipulation. And finally, a fascinating story in Italy with respect to Banca Monte dei Paschi. It is one of the oldest banks in the world and the third biggest lender in Italy. It's embroiled right now in a scandal with respect to a hidden derivatives trade that threatens to engulf not only the parliamentary elections, which are slated for next month, but also potentially the role of the European Central Bank president. Mario Draghi, of course, led the Bank of Italy for around 5 years and was said to have maybe been alerted to some of the dangers about the derivatives trade in this bank as early as 2010. There's going to be testimony in Italian Parliament today, and of course there'll be many, many more questions in the weeks and months ahead with respect to everyone's role at the top of Italian politics and indeed the top of the ECB to this developing scandal. We're going to keep an eye on that story, of course, in the coming days and all of the other stories as well. So do check out the economy page at ibtimes.co.uk.